Everybody, this is Paul Hitchcock. We're here with Fred Dawes, one of our excellent tax professionals. And Fred, this is a scary topic for a lot of people, is an IRS audit. So what are the tips to avoid an audit?
Well, thank you for having me today, Paul. So some of my tips to avoid an audit is, first and foremost, is taking a look at your tax return and looking at what type of a tax return you're filing to begin with, right? There are common forms like W-2s and 1099s and that type of thing that you receive. And as long as your information is entered incorrectly for your tax return based on what you have on those 1099s and W-2s and such, your audit risk should be minimal because the IRS already has that information. Where we get into a little bit more of a complex situation is when you have things like stocks or bonds where your basis is not it hasn't been reported to the IRS. So let's say you had a whole bunch of stock that you inherited from a parent or a grandmother. And let's say it was the Baby Bell stock, and you sold it for $80,000. The basis can be kind of a little bit hard to find. So you may get a letter on something like that. Or, for example, another common form that the IRS likes to audit is a Schedule C. This is a person that has their own business as a sole proprietor. They make their own income. Generally, the income's reported on Form 1099 miscellaneous. However, there's expenses. And sometimes they like to see what these expenses are, especially if you had a lot of mileage, let's say. They may question that. And ask for documentation or proof. Sometimes also charitable contributions is another area that they like to take a look at. If you've had higher than normal charitable contributions, let's say you just decided this year I'm going to really give some money to my favorite charitable organization, and it's like 3 or 4 times higher than what you normally do, and it's 3 to 4 times higher than the national average for your income. That may tip an IRS audit where they're going to inquire about, okay, well, we see you have this income, but you gave most of it to a charity, and that's not normal.
It sounds like these outliers could trigger an audit if something that you're not normally doing happens. And then if somebody does get audited, Fred, then do you get with them and help them through the audit?
Yes, absolutely. So, generally what a taxpayer would receive is a correspondence audit, which is just a letter in the mail from the IRS saying, hey, we found this difference, or we'd like to take a look at certain information that you have. And what a taxpayer should do as of that point is contact a tax professional such as myself or another appropriate tax professional to handle this. Taxpayers should realize that this is not a good situation. This is like getting arrested by the police. You really need an attorney as of this point. Not that we're attorneys, we're professional. We're tax professionals that can handle this type of thing. So you really need somebody who knows the system, who can act on your behalf, and get this either quashed right away in your favor or settled in your favor.
Right. Yeah. I've heard you say before, it's a business transaction, and you just got to jump into it like a business, handle it, get it done, and get it off your plate, and have somebody that knows what they're doing to help you. So, Fred, as usual, excellent information. Thank you so much.
Thank you, Paul, for having me.
Okay. See you next time.